Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views.
Hey, good morning. Happy Monday. What is this? The 19th September 2022. I hope you had a good weekend. We had over here in Park City the inaugural Deer Valley Beer Fest. That was a lot of fun. So no shortage of red out there on the screen. Equity futures all trading lower, although they are rebounding a little bit off the lows of the morning as we get closer to the open of the market. Commodities seeing a little more serious pain. Oil down like 3%, nat gas down closer to 3.5%. Brent back below 90. Commodity land just feels really heavy. Copper had some constructive action last week, getting above that 350 mark, and it's kind of giving that back a little bit. So I'm going to keep a close eye on that. Also hearing some talk out there. Technical folks looking for a retest of the June lows. Other folks think we're going to break below the June lows. I think that's entirely possible, as we've discussed. But the market typically does not trade in a straight line. So with the Fed decision coming up on Wednesday, almost everyone expecting a 75 basis point hike. Market may be setting up for kind of a rally on the post-Fed decision, maybe a rally on the news type of an event. I don't know if we're going to get dovish language in there. Obviously, if we get any dovish language, the market's going to think that's great. But we'll see what happens. One of the stocks we did mention a couple weeks ago, we talked about doing some work on some former high flyers. We pointed out Netflix, Uber, and PayPal. Netflix really catching on here of late. The thing that we mentioned that looked intriguing was the fact that Hulu actually makes more money per sub. Their lower tiered offerings, the tiers that do include advertising as part of the subscription model, they actually make more money on a per sub basis for those because you get the advertising kicked in there. So I thought that was interesting, and that does obviously translate towards what Netflix is trying to do. Mark Mahaney upgraded the stock last Friday. I've got great respect for what he does. Former colleague of mine at Evercore. I didn't work at Evercore, but we worked together at Citi. Anyway, upgraded last Friday. Another upgrade today from a sell-sider. That continues to look good. Uber actually continues to look good too. We'll see what happens here. I'm not in a real rush to go buy it, but I am watching it. One thing that does look potentially compelling, the TLT long duration treasuries. We are there. I was going to point out today because they were lower. The support is at 106.20 according to the work we subscribe to. Maybe that's a cue for rates to soften up a bit midweek. It seems like every time the rates are up, then just the futures equities just don't like it, and they go down. The 2-year going closer to 4%. But we do have the TLT now trading in the green by the tune of 20 bips. So that's a little interesting, maybe hopefully a little bit of a cue of softening coming in rates as we get more into the week. And that's it. Nothing really changed for us in terms of like the med device space, IHI. We think that can make a move between now and year end. A little bit of a catch-up trade with the rest of healthcare. Energy looks heavy. Don't know if I'd add here today, but maybe today is the day to add. Have an awesome Monday. We'll come back to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.